I want to be very sensitive to the things that you all care about, and the reason you're here is to make more money. Anybody here for a different reason? Okay, just want to be clear. So what asset classes make the most money? Early stage investing. Sometimes people refer to it as angel investing. Some of you probably are angel investors. Some of you may be venture investors, which are really a completely different class in the rounds, past the ABC rounds. But where I've lived for 50 years is in the early stage seed round, which is a completely different class of venture. It's early pre-seed seed venture capital. It's 20 times your money. Now the best part about it, it doesn't have a socioeconomic component. I don't have to worry about multi-currencies. I don't have to think about any of that stuff in wondering. I don't have to postulate about whether the ruble is going up or down. I just have to find and collaborate and support for up to 10 years or longer some extraordinarily amazing founders. Can you think of anything more fun to do with your life? It's been 50 years of my life doing this. 50 years of enjoying the opportunity of being connected to some of the smartest, brightest people. As my young son once said to me, "You're the most relevant dad I know." He could have said, "You're the richest, kindest, best looking." He didn't. He said, "You're the most relevant dad I know." If you want to be relevant, and you want to have fun, and you want to make, okay, I don't want to sell hot dogs, but you want to make gobs of money, early stage investing is the only place to do it. And you actually do good, because the opportunity there is that many of these companies are actually doing some innovative things that help the world. Some aren't necessarily doing that, but you make all your money and then you can go help make the world better by being a philanthropist. So I wonder a lot, and just sort of touching on what I wanted to ask, I like to know what the next shot is. How many people play pool? If you play pool, it's not
the shot. Or like Wayne Gretzky, you want to be where the puck is going.
There you go, right? So when I hear people on panels, I get bored stiff when I hear about the moment in time that they're talking about. I want somebody up here to tell me where things are going.
So where are things going?
There you go. Thank you. Right. Sorry, I mean, that's what you want. You want the tough debate.
Where are things going?
So I have a new fund. I ran the Young Angels for years. They're going where the war is. They're going where technology needs to evolve to be able to win the wars, to fight the autocrats, to manage the difficulties that we have in life. It's going towards biomedical devices. It's going towards a lot of things that help the human part of us be better, smarter, faster, and able to cope. Those are the things that matter. Those are the things that make your families better.
So Suzanne?
So, yeah, I mean, I want to touch on that in a second, but just I come at this from a little bit of a different place, right? I wear two hats. I have my own family office, and then I work in the credit space. And I totally agree with what Brian has said about venture and how exciting it is and how much money you can make. But when you're investing, I think you have to decide, are you in the get-rich business or the stay-rich business? So from our family office perspective, we're in the stay-rich business, right? It's about leaving money for my daughter, making sure she's taken care of, hopefully making sure her children at some level are taken care of. Although, by the way, we've got bad boy clauses and all sorts of things that they have to work and they have to do their own thing. They don't touch the money until they're 50 years old and whatever. But because I want them to become productive and responsible human beings. So we invest from venture, early stage, all the way through to things like long-short equity, right? What we don't do is traditional fixed income, and we don't do long only for the most part. Because again, if I'm earning 7 to 12% net, that's more than enough. And so we do swing the bat in your field to get some upside, but we also have some very much lower risk things. In terms of where the world is going, I'm very concerned. I'm going to put the negative first, and then I'll put the positive. I'm very concerned about AI. At Mark's last conference, we had somebody terrific who's one of the founders of AI, who's also starting a 501c3 to protect children from AI. And pardon?
He thinks we have an existential issue with it.
Yeah, well, I think it is an existential issue. As an aside, my daughter's school is hiring a new head of school, and they had a woman who runs a K-8 school in Tokyo who's one of the finalists for the job, and she said on the call last night that she thought AI was okay for homework. I was like, okay, if you hire her, we're leaving the school. But I think where we are in AI is somewhere like the internet bubble or fiber in the ground in 2000, right? It's all lit now because we need it, but it was in the ground way too early. All those companies went bankrupt before a lot of people made money. All these internet companies that had no revenues and huge valuations before the NASDAQ crisis had no revenues. They either went bankrupt or got bought or something, and then ultimately became some of the leaders that we see today. But it took a while to get there. So I think you're going to see that happen in AI, and I'd be very cautious there. I'm going to disagree with Barbara's comment that the Fed is going to cut again. I'm definitely in the higher for longer camp. I think the Fed has seen that cutting really hasn't helped anything. You read all the statistics on mortgages staying higher for longer. My father's widow happens to belong to the same golf club as Jerome Powell, and she says if you watch his body language, she's not cutting again. Who knows? I mean, again, that's anecdotal, but I'm in the higher for longer camp. I do think that's going to create a lot of opportunity and credit, particularly for small companies. Small companies do not have access to capital that they used to have. The regional banks are hamstrung. Basel Endgame next summer. Banks aren't lending the way they did, and private credit has grown, as we know, exponentially, but there's still a lot that needs to be done, and these smaller companies are going to have to refinance their balance sheets, not for the least of which reason that the private equity sponsors rather, have levered up these balance sheets when rates were zero because they could. And I hope it's the president.
Sorry about that.
Is that the president?
This is Brian's.
It's actually the VP.
So I do think there's going to be opportunity and credit, particularly in small cap corporates. I think the volatility that's going to be in the market is going to be very good for long-short equity.
What about real estate?
It's interesting. I think there's going to be a lot of opportunity in real estate debt, particularly commercial. And I know you know a lot. You've probably forgotten more about real estate than I know. So I don't really want to comment on that so much. But what I will say is, I do think that there is going to be a tremendous amount of opportunity in commercial real estate lending, and the restructuring of a lot of those problematic balance sheets.
So maybe in this, we are in your home, so you can answer calls, I guess, if you want to.
I was teasing.
But Brian's also a fellow Wolverine, and but how do you see maybe real estate as an asset class, since that's obviously there's a lot of segments? Well, the question we always say is what scares and excites you about investing in real estate today?
Good question. My area of focus is really tenant representation, so I'm certainly not as talented and have the in-depth knowledge that some of these other panelists have. But what I can tell you, as someone that represents tenants, my overriding concern is the amount of CMBS debt that is going to roll over in the next year and a half, 2 years. We're already seeing that start to hit the market with some very prominent and well-respected landlords. Scott Reckler and RXR defaulting on $670 million worth of debt at 230 Park. If you're a native New Yorker, you know that building. If not, it's a beautiful building at the end of Park Avenue with beautiful filigree and everything else that sits in front of 200 Park. So that is quite a shock. Scott also gave back 61 Broadway, which is downtown. He bought that building probably about 2.5 years ago. And obviously leasing prices have been depressed. And he sat with his team and penciled it out and called the bank and said, here's the keys, have at it, because this deal, this building does not make economic sense for us. We're also seeing that with RFR, which is a very, very prominent, well-respected owner. They own 375 Park, they own 390 Park, among others, backed by big money out of Germany. And they made some big bets on Seagrams. I remember when they bought it, and they based their debt on $125 rents. I thought, there's no way that's going to happen. Except it turned out to be a winner. I mean, I recently represented a private equity firm in there, and the rent that we got was $155, $160 a foot, and they've done north of $200 a square foot in that building. So they've done very well. But they run into trouble with a number of their other properties. The other owner is Savannah, which is, they're more opportunistic than RFR. RFR typically is a, buy and hold for a very extended period of time. Savannah's run into problems at 521 Fifth Avenue.
Can I ask you another angle
Sure.
of real estate? Since you cover so many parts of the world, we just had a global panel talking about do you invest in China or not? Some people are running away. Some people say this is the time to get in. And I can't really trust all the data, but you have a lot of data on China.
Right.
How does Cushman see China today?
Inbound or outbound?
I do. Just the fundamentals, I guess, is really.
Well, I mean, my former colleague, Stephen Rockefeller, and I do a tremendous amount of work within the Chinese business community. And we've represented a number of high-profile private equity firms, most notably Huatai Securities, which is the 5th largest private equity firm in China. And we moved them from Hudson Yards to Woodley Park. In answer to your question, I think a number of companies that we're working with are downsizing, and also shortening their lease terms because, like a lot of American companies, they don't know what the future holds. So I think, in answer to your question, they're being much more cautious and trying to shorten their commitments, not doing lengthy obligations because they don't know what the future holds, and particularly in light of some of the economic problems that China's having, the geopolitical stressors that we see becoming, under Biden and certainly under Trump. I think that's going to add some additional instability to the situation. Does that answer your question?
In part.
Okay.
Go ahead, Brian.
Yeah, let's just play the professor for a moment. I don't come from the financial world. My whole life has been about startups and working with startups to help them achieve success, okay? As a professor looking at this the way you would, you each have your silos. You have credit, debt, real estate, and you all play in those spaces. And you all want to look over the fence to see what's going on in the other spaces and how can I play in those. I find it incredibly problematic that no one that I ever talk to, and I've spent a lot of time listening as part of all these companies, organizations, Tiger 21, 3i, Dynasty, everybody I look to give me answers. What's the answer? What is the answer? What should I be doing? Over and over again, I hear conflicting arguments, everybody figuring out what they do.
Diversification.
There you go. Well, I just listened to a presentation by Steve Dubner from Freakonomics, and he said wealth management is bizarre. They're not there to make you money, they are there to keep your money. That's right. But you want to make money. Okay, so it's not an all or nothing, so I don't want us to have this perspective that it's either what I do or what she's saying you do. It's a let's call it a dumbbell.
I think it's a perspective.
It's a
Some
dumbbell.
people
It's a dumbbell. My only joy is to give you the joy that I have. Joy in making money. Joy in making a lot of money if you can, if you're really smart. And let me just make it clear, it's not easy. But there's people I train to be extraordinary early stage investors, which is not venture. It's a completely different category of investing, the early pre-seed and seed investors. Because you're there when the company's just starting. You're there when the company's just getting going.
Well, you're buying an idea.
It's fantastic. My joy is to be the first check. The very first check that acts as the fuel. I want to be the financial founder. Okay, so I made a point. A barbell strategy. Keep your money. Don't lose it. Put the money over here. If it can be safe and get 6%, it scares the hell out of me that my money would only get 6%. It must scare most people. That's it. Just 6, maybe 5. I don't know, whatever the number is. I go for 20 times. If you really are wondering about the future, the only way you can make the future, predict the future, is to make the future.
Yeah.
And the companies that I'm working with every day I work to find these companies. They pitch me while I'm riding my bicycle on the Upper West Side. Right? Brian, we want money, we need money. There is nothing better than making the future happen by being the innovator for that future. And every one of you should be considering making some opportunity of an innovator in your portfolio. Not all or nothing, but the fun that you'll have doing it is immeasurable. The risk is extraordinarily high, but the rewards can't be beat.
If you have the skill set.
I can teach you.
He just offered to teach a class, ladies and gentlemen.
No, I travel the world, I wrote the book on it, read my book.
What about questions from the crowd? Interactive.
I always measure the quality of the audience by the questions they ask.
Right. Hey, so,
Or not asked. The early stage venture business has resulted in a lot of people going out of business.
What do you mean, the companies or the people investing?
The investor community, there's been a lot of turnover. A lot of people don't achieve the success that you achieve. So big institutions often don't want to allocate to emerging managers and smaller players because they're not sure how long they're going to be in business. You've been an outlier. What has been your secret sauce?
Well, it's very kind of you to ask. When you look at the games of Texas Hold'em in Las Vegas, you wonder, 100 tables filled with people, and that somehow those last tables get some of the same people at them. How do they do that? They're all looking at the same cards. I was a science journalist, so all I knew was to ask questions. I don't have to have the answers. I could ask really good questions. And not enough people know what the good questions are. So I could teach you how to ask the kinds of questions that do due diligence, not DUE. That's an old term I hate to use, because every young company you could find something that hurts, right, a red flag. I want to look for the reasons to do the business, do the investment. So I ask really good questions. And when you look at some of the most successful investors in our space, it's Mike Moritz, it's like Leo Hirpo, we are all journalists. We have a high bullshit meter, right? Forget it, we're done with you, right? So it's being able to say no. So I'm giving you the macro. I don't even have to know about what your business is. I just have to look at how well you can execute. If you can't raise money well enough, if you don't know the difference between a safe note, if you don't know the difference between debt and equity, if you don't understand what terms go into a venture capital term sheet, why would I invest in you if the most important thing you're doing, which is raising money, and I can't watch you run your business, but I can watch you raise money. And if I can see you raising money poorly and not asking good questions, why would I think you can run your business any better? So I can give you all this anecdotal, very specific, 50 years of wisdom. And I do that for everybody. All over the world, I teach this. And it's so easy. Does it always work? No. No.
All right, so you see a workshop
I wanna-
coming together.
Yeah, no, and we're gonna have a breakout, I think, on emerging managers, but just to address that in terms of, I do think, and I've always been a big proponent of emerging managers, right? And the numbers bear it out, that they do better over time. But as an investor, I come to the table saying no. And talking about being good at raising money, I always tell managers, your job is to get the investor to get to yes, right? Because everybody comes to the table wanting to say no. Because one of the most important things, I think, and this I think applies to a direct investment in a company or an investment in a manager, is it's much worse to get a bad one than it is to miss a good one. Because it's much harder to recover from that. So anytime I'm meeting with a new manager or looking at an investment, I come from a place of no. And it's the manager's job to get me to yes. And if an emerging manager in particular can do that, and I can see that, to your point, if they can't raise money, they can't run a business. And running a business is really important, right? The guys spinning off the desk at Citigroup, who they raise their hand and somebody put a pencil in it, they're not going to Staples to buy the pencils. Right? If you can't see somebody that can run that business or have an infrastructure behind them, that's scary. And look, Madoff taught us all, there's now a whole business of operational due diligence, which didn't exist before. It should have. And if you were investing right the way we were, we said Madoff was a fraud. We didn't say it was a fraud, to be honest. And I'm in a lot of the books about it. We said, we don't know what he's doing, but we know he's not doing what he says he's doing. We didn't come straight out and say, this is a fraud. But
is that called lying?
Yes,
Yeah,
that too. But you've got to do the work, right? You can't just, and to your point, bullshit meter, right?
Bullshit meter.
Like if that goes off in my head, I'm done. Like the meeting can just be over.
I used to have 5 words, and if they said all 5 of those words in a conversation, I go bullshit and leave. Because they all use the same words.
Yeah, it's. What are the words?
What are the 5 words?
We'll go through that in class.
And I also just want to add one thing that Brian said earlier. I'm also very, very bullish on healthcare, medical devices,
Yes.
and products and services for the aging. In fact, somebody that Marjorie and I both know, Alan Patricoff, who's one of the most famous venture
He's
investors.
my closest friend.
Okay, he's one of my closest friends.
Yep.
So I'm surprised we haven't met.
Yep.
Were you at the party?
I was with Jamie.
No, at the wedding party.
Right.
No, I wasn't.
Anyway.
I wasn't in town.
Anyway, but, he just started his third venture firm, right? First Apex, then Graycroft, and now he's got a firm called Primetime Partners,
Prime
thank
Time.
you, that is only doing venture for products and services for the aging.
And he's only 91 too?
91.
91, right.
And your funds.
Yeah.
Yeah, he's got a young partner, Abby Levy, who came out of,
Other questions?
I'm blanking.
Only good questions.
Yes.
Question for Brian in real estate, not Brian in venture.
Oh.
Or Brian in angel. What do you see with the real estate converting to alternative uses? You know, offices becoming residential and all that kind of stuff. I happen to live in just outside of New Haven, and they railed against the mall. They wanted to turn the mall into housing for some strange reason. The town zoning just lost their shit. I mean, it just went nuts. And they've done it in other malls. And I was just curious, how does that conversion or flip rate affect the not only commercial real estate but in the A's and B's and the suburban kind of markets too? How do you see all of that kind of playing out?
Obviously there's been a lot of press about resi conversion. The simple fact is that for most situations it really doesn't pencil out, simply because the infrastructure of the building doesn't support that kind of conversion. They've been looking at Class A and Class B and Class C properties that typically have a lot of columns. They don't have enough windows. Typically they're on a side street, so it's windows front and back, which doesn't give you the light views that's conducive to an attractive residential project. So I think that there are certain situations where it makes sense. 55 Broad downtown is a resi conversion. I think they're converting one of the buildings on the east end of Wall Street, and 655 Madison is going to be a resi conversion. But I think for the most part, it's few and far between. And I mean, they just rezoned a big portion around Penn Station. A lot of those are B and C properties, which are way underperforming. And I think at the end of the day, they'll probably have to be demolition and brand new projects, and that'll be the most sense, that'll draw the kind of returns that the investors are going to want. And just to tag on to some of the other comments here in terms of distressed debt, as far as an investment opportunity, I think if you're a savvy investor and you can go in and get a mezz piece in the debt stack, S.O. Green is famous for that. That's how they got control of 245 Park. I think if you're a sophisticated investor, that's where there are opportunities for outsized returns down the road. Obviously not in this market, but if you've got a horizon of 5 to 7 years, I think you could probably do pretty well.
And you're seeing some managers come out in that space too. A guy just spun out of Michael Dell's family office, I think it's called MSDBST, is raising a whole launch with $1 billion with half an evergreen structure and half a private equity structure, and then some separately managed accounts alongside to do that.
Just on real estate, park it for now, because there's going to be
Enough of real estate.
There's going to be an hour of it at the end of the day.
Everybody's losing so much money in real estate. What are we even talking about?
Any last question? I need to buy 5 minutes of time anyway, so. Yes.
Brian on venture. What's your view on climate as a venture space, as an early stage, pre-seed, seed stage?
Well, again, it's hard, right? Certainly difficult. Prediction about the future, particularly about the future, is really hard.
Well, wait a minute. That's not the obvious thing with venture is predicting where the future is going, and what certainty do you have that it's going there? I think most of the evidence would point pretty strongly that climate is becoming more of an issue.
Unfortunately, there are things called regulations, and there are people, unfortunately, who manage and organize regulations who don't want to do the things that are right to do. And we're finding it out with COP, of course, they just turned their backs on what we thought was going to be the best of climate resolutions to fix the climate so we don't go up 2.3 degrees, in a short period of time that we have to survive. It's really bizarre, but don't you ever get the feeling that no one cares, right? You just say, well, the fact is that's the most existential threat we all face. So it's very hard to be a venture investor when the people who own the spigot, right, who manage the on-off switches, don't give a shit, right? And they're only interested in short-term. They're only into the short-term profits and the needs that they've got right now. So it's a very tough place to be. My friend Hank Rogers, the founder of Tetris, he's a he just pushes, goes for it, creates batteries, losing so much money, but he feels good. He feels good about losing all that money because he's trying. So it's a lot of social good feeling that you get from it, but not a lot of reality is being placed on what is going to be a fix. What is the fix? Well, wind is working. Wind has now got wind has catapulted its way up to the top. And I think wind is now taking a better place. And it's not susceptible to the ups and downs associated with a lot of the historical prices that have been sort of challenging alternative choices. But I'm looking at plastics. That's an existential threat. Some kids at university has a plastic now that immediately dilutes in salt water. Thank you very much. No more microplastics getting into our bodies. But the real problem now is filtering our blood. Yes, I'm sorry. We have to filter our blood to get the microplastics out of our brains. So I'm looking at that as an effect of climate change. So I can't tell you about how to fix climate change, but I can tell you how to mitigate the disasters that it's causing. So those are the places I'm looking. So it's related to climate change, but I want the companies who are fixing what the people who should be fixing things aren't. And I want to help them manage their lifestyle better. That's what I care about.
What about carbon capture?
Well, carbon capture has been around a long time. It's nothing new. Putting it in the ground, making it something that, what about stopping stopping cows from farting or burping?
Yeah.
Right? Yeah. Right? Well, they found some innovators in Canada. Feed them seaweed. And they fed the cows seaweed and they stopped farting. That produced 50% less methane in the air. So I'm looking for those innovators, right? Those are cool. The cows don't have a choice. They just, they're not regulated, right? Anything that's regulated that is in the climate space, I can't handle that. I can't choose it. It's hard.
Yes. And by the way, I think that's true of all investing, right? You want to really think about, are these regulated industries where somebody can make a decision or pass a law and you're screwed.
Right.
I don't tend to like regulated businesses.
We just looked at a deal that made it more efficient to create concrete. All right, so that is something that's better in the climate change, just more efficient ways of doing things that are bad for the environment. And the crazy part is they're raising all this money from the top names, and it's all just in the Petri dish. Right, so it works in the Petri dish, but we have to raise another $400 million to get this to be, commercial use, of which about $200 million they're expecting to be subsidies from the government.
Yeah, there's a great line. I love lines. You're all wise, right? Well, there's a great line that I once heard, said by Paul Sappho. Paul Sappho was the president of the Institute for the Future. I love some lines. He said, don't confuse a clear vision with a short distance. You got the two mountains, right? You're on top of one. You see the solution, the vision right there. Right there. But you got to get down the mountain, cross the valley, and get back up that other mountain. So that is the best example of that.
It's kind of what I was saying about AI.
Yeah, well,
I have a question regarding that. My name is Maria Dolores. I'm the founder of the Human Contract Foundation.
Sounds impressive.
Sorry?
Sounds impressive.
Yeah, it's...
Sorry, didn't mean to throw you. It's just a human contract.
It's about how we deepen governance. My question to you, Brian, is the balance of investments of fixing the existing problem, or rather to have preemptive projects that is preemptive for a better
More
future.
forward thinking.
Yes, exactly. Thank you. I'm Swedish. Lacking the words sometimes.
No, you speak very well. So what was there a question, or is it better to have something that mitigates rather than something that creates?
I think you were saying that you liked investing in things that solved problems versus.
Yes.
Yeah.
There's an existing problem, I can tackle that, I can make them feel better, I can make them look better.
Brian, yeah.
Sorry, well, yeah. I love those. I can't do the big ones. They just take too much time, too much money, and I can't get everybody behind it, and they're way too risky. And I started the Science Literacy Foundation because I wanted every one of you in this audience to be more science literate. I thought you wanted to be. I put $1 million of my own money into this foundation. I hired the editors of Scientific American and Omni Magazine. And I started a magazine online. You go read it. It's called Open Mind. I want people to have open minds. Do you know how many people don't want open minds? Do you know how many people don't care about thinking open-mindedly? It's like that myth of Sisyphus. Remember Sisyphus, right? You roll the boulder up, push the boulder up the hill. I pushed it up an inch, it would roll down a foot. I had this.
The balance of fixing existing problems rather, or the balance of having forward thinking.
Both. Yeah. Where I think it could work, I mean, listen, it's all up to our individual desire to determine what the future may look like, right? I make those decisions by what I see, but I look at 200-300 companies a month. It's not easy to figure that out, to determine that. But then again, at my stage of investing, it has almost nothing to do with the product. It has everything to do with the founder, because there's not enough smart people.
Can I ask you, yours made me think of, are you using AI, but I'm just thinking about your industry. Isn't AI like completely disrupting the leasing business if you have like transparency of information?
No, not really.
So
To some degree, but no. I mean, you know, real estate is not the most adaptive business that's out there, and you've got a lot of people that are investing in sort of keeping it the way that it is. We have a lot of attorneys. I work with some of the best, and you know, they're charging $900 to $1,100 an hour to negotiate the business, the legal aspects of a lease. So, I mean, AI has some role for elementary aspects of a lease, but I don't see it making a significant impact, at least at this point.
I just want to go back for a second, and this really doesn't have to do with asset allocation, but I'll make a comment on your question.
Yes.
One of the things I would say about being forward-thinking and preemptive for these problems is listen to your children.
Yes.
My daughter came home when she was like 8 years old and said, "Mommy, no more plastic in the house." You know, or you know, what can we do differently to protect the environment? And you know what? No more plastic water bottles. No more. I mean, we got, you know, Stanleys or whatever the water bottles are that now are a staple in our house. So I think the kids come home because they hear this stuff and listen and just do it. And sometimes it doesn't feel like you're making that big a difference, but if we all do that little bit, it adds up pretty quickly.
Oh yeah, you have that circle of life thing. These are my three.
What?
Look at electric vehicles, look at solar.
Yeah, I mean the circle of life thing. You just need 3 grandchildren that look like that to hope that your future is going to be something that you're going to participate in, and you're going to be part of the fix.
Yeah.
That's what you need. Just the circle of life stuff, which is so cool, right?
Yeah, I hope I'm a really old mother, so I'm hoping around to see the grandchildren.
Oh
We'll
yeah,
see.
you too. Yeah, of course you. Of course you.
Brian, what do you do with all those companies? You're an angel investor 40 years. What
45.
do you,
45, 50 years. Yeah.
okay, got me by 5. Anyway, what do you do with all those companies when they need to grow up? You're going to stay an angel investor.
I mean, Esther Dyson said it best. It's like having sex. You have the children. You got to bring them up, right? You have
Do
to.
you bring them up, or do you just let them go?
Well, at some point in time, you know, you're the place that they live when they're the youngest,
Yes.
right? And that's my ability.
Right.
I built the largest science and technology communications firm in the world. I sold it to McCann Erickson. That's my ability.
But then what?
Well, then, unfortunately or fortunately, depending, new money talks. He who has the gold makes the rules, right? So I can't change the things about the people who have all the money. I sit on boards, and some of the board members are from some of these venture firms, and they're telling the founder what to do, and I look at them and say, "Did you ever make payroll?" Right? So we have venture capitalists who have no rules, no history, no background, except a lot of family money, a lot of money to piss away. And it's horrible.
My money wasn't family money, by the way.
I'm not saying it
Just
was.
saying.
Did I look towards you?
I made it myself.
All right,
Thank
okay.
you.
You said family. Family office. Didn't mean anything.
Didn't divorce it, didn't inherit it,
Right,
just
right.
to be clear.
Right. So you know, no, you pass it up. You give it up for adoption. And you hope. There are VCs that I love, that I really don't care. And those are the ones that I'm going to not have any sharp elbows with. But the others, I will. And because I've had the chance to develop a tight, love the ones who love you first. That's what's in my book, right? The founder loves me, and they will listen to me. Even when the venture capitalist says, no, here's 100 million, 200 million, $1 billion, do it my way. Well, I hope they will listen to me, right? Because unfortunately, nobody does.
The other thing is you have a rule that your kids have to start a company.
Well, for each of you that are young parents, you know, I thought the E stuff, and I started doing it before the word entrepreneur was brought over from France. I thought there was no reason why kids weren't taught entrepreneurship from the earliest age. And yes, it's hard, it's painful, and all the things that make it lonely and challenges associated with it. But to build a family, so it's a new book I'm writing, How to Build an Entrepreneurial Family. I think there's nothing better you can do than to have your child start a company. And to be, you know, a lemonade stand was always a perfect example of that, right?
All my kids had lemonade stands.
Yeah, right.
And I'll just add to that, I mean, it's funny, there was an episode of Shark Tank, which I will never forget, and there were these two kids, and they had a product that, it was a wipe that men could use to take body odor off of their clothes. And the sharks were all going after them, how they had raised $1 million to get the product to where it was. And the kids were kind of surreptitious about where they got the money. And they finally admitted they got it from their father, who had invented GameStop. And who's the real estate woman? Barbara Corcoran says, I'm out. I need my entrepreneurs to be poor and hungry and, you know, whatever. And all the sharks jumped on her and said, what, you're saying that my kids aren't going to be successful because I was?
Right.
I mean, the best gift my father ever gave me was the day I graduated from college. He shook my hand, he kissed me on the cheek, he said, call home for advice, don't call collect. And for those of you who remember that, my daughter doesn't understand this, and don't call for money. And I would go to my parents' house in New Jersey for the weekend when I was in the training program at Drexel Burnham, and I'd borrow $20 for the bus. The next week my father would be like, where's the $20? He's like, you're coming out of college with no debt, you've traveled around the world, you've stayed at the Ritz in Paris, I had to do this on my own, now it's your turn. And when I was about 30 years old, and I was starting to make some real money, he sat me down and he said, I hope you understand it would have been easier for me to write a check. He's like, because I know for the last 10 years you've hated my guts. Because I haven't made it easy for you. I mean, I was living in an apartment with my father in the West Village, he charged me market rent. From the day I graduated from college, so I was making $1,600 a month and my rent was $800. And I was living as a woman in New York City on $800 a month. And my dad was like, too bad. He's like, I worked in an ice truck when I was 8 years old. And you know what? It was the best gift he ever gave me.
Well, this isn't what this is supposed to be about, but we all want to talk about this stuff, right? You know, Tiger 21, I gave a talk. They asked, we're rich, we don't want to leave it to our kids, we don't want to screw them up. What should we do? I said, I had a book on my desk forever, in my office at home, and it was called Die Broke. So every time the children walked into my office, they saw the book. They said, Dad, what does that mean? I said, I'm spending all the money before I die. None of it's yours. They started to cry. I said, well, that's not the end of the story. And I told this at a story, and I told this, and it's in Tiger 21's book, Stephen's book, Michael's book, but I will invest in you. I think of you as the CEO of your own life. As the CEO of your own life, you don't know everything yet. And my job is to help you get there. I won't leave you money, but I will invest in you. You want to start a company? Done. I'll fund you. You want medical support? Done. You want to get an education? Done. You want to give to philanthropy? Done. I will give you every cent I've got in those categories, but I won't just hand you money.
I mean, that's exactly was my father's philosophy, and.
Now we're doing the next gen parenting.
Okay, sorry.
But everybody here, was that interesting? I mean, I hope, right? This is good.
No, I mean, I think it's important though to also teach your children, and I know this is not a next gen parenting panel, but like the value of money and understanding it. You know, like my daughter's getting bat mitzvah this year, and she's like, "Why is somebody so much more extravagant than ours?" And I said, it has nothing to do with how much money we have. It has to do with my values, right? You want to write a check to a charity? We'll write a check to a charity, but I'm not spending it on a 13-year-old's party.
Okay, on that note.
That was fun.
Yeah.
I enjoyed that.
We're not done. We're gonna move into these breakouts.
So you know that he was on Shark Tank with an amazing product. How many years ago?
9 years ago, a few weeks ago, and then my brother's company, he wasn't on it.
But if you want to hear about
Did you
this
get
story,
funded?
He was on
here's
Shark
my
Tank.
point. I gotta take the mic. If you want to hear about this story, we gotta go to the VC private equity breakout. So I've got this right.
It's a great story.
It's gonna be on one half. Well, first, just go mingle for a little bit. Settle that in about 5 minutes. Get into venture and private equity, credit, real estate. Then the various parts of the world will be out here. Suzanne will be right here in the corner,
There? Okay.
talking about emerging managers, and then public markets, and actually probably GCC will put out here. So, sort of asset classes, and then parts of the world.
Anything you don't do.
We'll do industries next round.
Mark, tell everybody where they are. Tell everybody where those are.
He just did.
Well, there are these. Just go make. We'll put the actual names of the of those rooms. But out here, you'll see there's like this little bench. You have to keep on peek back in. Go back to the space. I think she did it.
We're in the VC room, yeah?
Yeah, VC and private equity credit. Yeah. I think this is VC over there. This is private equity credit over here.
All right.
Nita, you might want to look at it again. I think that's over.
So what it is me, Scott. I've known Scott
We'll be doing
for a long time. He's one of the smartest.
Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.